Okay, in 1 minute, there is high impact news. Welcome, everyone. Good to have you here. And yeah, in 1 minute time, we have this going on here. Wait, the economic calendar. Tuesday, January 14th, 2:30 p.m. is Central European time. High impact news as per the website here, 3 stars. So let's see if anything happens. We are live 1 minute before. Let me stop the music here and close Spotify. There we go. So let's see if anything happens on the chart. At the moment, I am observing what you see here. I would just really like to hit solid resistance, being that daily naked point of control I'm interested in. But yeah, we just keep an eye on this invalidation 93.5k. If you do move below this range here, that wouldn't be too great. So preferably you avoid touching the 05. But yeah, there we go. We now have some news coming in. And you can see immediately some volatility. I'll put you guys on the chart here as well. So we will be observing this in the first minutes of the live stream, see what happens on the chart, and then take it from there, no? And then we get into the analysis. But of course, once you get some news, it it can have an effect on the Elliott wave analysis as well. So let's see what happens on the chart. We hit the 236. We get a bit of a move towards the upside. So I'm actually not sure if we now touched the 88. Not yet. We didn't yet touch the 886. Oops. Volume. Let's see what the volume does as well. So make sure that you trade safe around these type of moments, of course, because of the volatility that is expected, right? It's expected seeing this type of movement during the volatility here. So trade is safe. Trade is safe, please. Okay. WJ Young, welcome, man. GP, Rahul, TP, what's up? Hush, Mike Warner, hello from sunny Florida, and here from the Philippines, Mr. Young. Welcome, guys. Spot on lately. How about Bitcoin Cash, if time permits? Yeah, let's focus on Bitcoin. So I wrote in the title and the thumbnail as well. So it's a Bitcoin analysis. If we do have some time, I'll check in on some alts, but it really depends on what Bitcoin is going to show here, no? So let's be patient and see what we get. Of course, your arguably most bullish scenario would be that this is just a multi 1-2 and you're just starting a wave 3. Possible, but currently the highest probability count is the one I have on my chart. And then your alternative would be to count multiple 1-2s, and then you look for a wave 3 to the upside. But yeah, it's we take it step by step, not take it step by step. There's no reason to be too bullish nor too bearish. You just trade what the chart gives you. And if you're not in a position or you already took profit, who cares? There's always going to be a new opportunity. I remain patient here when the volatility hits. Also trading around news, by the way. I personally don't really like to trade around news because of the volatility. I know that I do best when price is calm, right? So of course I like the ranges. The ranges is where I excel. So the long that I took, I did not take a long at the low. I posted it on Instagram. You can go to my Instagram. I made a video in Instagram story where I showed my trading day yesterday, going short here, selling at support, going short again. Then eventually, yeah, you'll see it in the story, and then going long here, taking 50% off before going to bed. So basically, in my Instagram story, I explained how and what, and you can see that I avoided buying in this wick because it's not my cup of tea. I wait for a range to form, and once the range gives me what I need to do or want to see, then I enter. So I'm a very very patient trader in that regard, and it definitely worked for me. Now, I think we also now hit the 886 locally, so I was, of course, talking about it just now, but I think we now actually touched it. So after an 886 touch, it is quite common to see a bit of a reaction like you see right now, right? So price rejecting at the 886 is very common. There we go, 618 to the golden pocket. Let's go to the 3. Yeah, there you go. I mean, even if you go to the 1, 886, golden pocket, absolute beauty. So anyway, the probabilities now are higher for price to sooner or later take out the high. That's basically what the 886 is showing you. But then again, trade safe because of the volatility on the chart. Aramna, welcome. Sam, what's up? Good to have you here as well. Christian, Saragas, Smoko, Gloomore. Wait, Liquid Mafia, yo, good to have you here. It's been a while. How are you doing? Off to sleep soon. Yeah, it's a time thing. I mean, that's why we often don't have the opportunity to really meet in a way during live streams. But hope you're good. Liquid Mafia, everyone, if you go to Discord and you search his name, has a very unique analysis style using Fibonacci circles. It's very inspiring. No joke, welcome. Gaming Yeshu from Sri Lanka popping in as well. Bogdan, what's up, man? How you doing? You chose a nice time actually to come back, Bogdan. Yeah. We definitely had some good price action over the past weeks. TP, did you watch that link I sent you? Oh, not yet, TP. I have seen you posting the link. I haven't yet seen the video though. But of the crib. Okay, I'll make sure to check it out and I'll let you know my my thoughts. Okay, Polar Bearman, welcome. Hope you're doing well and stayed healthy. Yeah, so far so good. Good start of 2025, to be honest. P&L is nicely in green at the start of this year. So it's been very good. And now the moment, like what I feel, so, you know, psychology is, of course, a big part of what I like to talk about because it's very underrated, trading psychology. But I can feel after the good start of 2025, we're halfway in January. I can feel the how can I say? It's almost like I can feel the success. Like you don't want to take too much risk now or go in too many trades, trying to find too many opportunities because you're in a good flow. I think Paul Tudor Jones has a quote where he says his biggest losses came after his biggest wins because he thought he knew what he was doing. Check that quote out. It's actually from himself, and I think it's also quoted in the book Market Wizards. So yeah, a couple of 2 good weeks, and now I also try to avoid doing the stupid stuff. You know what I mean? So hold on to profits is very important. Muganduzi, welcome. AJ, Jeffrey, good morning. What's the pump just now? It's the news PPI here. Now, I'm not a news guy, so honestly, I don't really know what all of this means, but let me refresh here. It's in general, it's a news-heavy week. Okay, so here, Tuesday, January 14th, 2:30 p.m. Central European Time. All right, so what do you guys, so for the people that know fundamental stuff like this, what does this mean now? Like, what's the conclusion of the news? Like, what was expected? And I only look at when is there high impact news, but I don't actually know what all of it means. I just know it can increase the volatility, so I know that I trade safe, which I always say in my videos as well. Is make sure you trade safe because of the volatility. So important. Osmos, bonjour. Good to have you. Christian, what's up? PPI lower than expected. Producer lower than expected. And what would be the what would be the result of the fact it's lower than expected? Like, is that like bearish or bullish, or like it's as expected, so nothing happens. Ice Cubes lady, welcome. Turbo, Trackmania Turbo? Question mark. It's a good game, yeah. I don't know what you mean. Maybe it's an altcoin, but we first focus on Bitcoin. So the structure of today's live stream for everyone that just came in, we will first observe what price does here because of the news. So we give ourselves a couple of minutes to observe what happens. Generally, probabilities now are higher for price to take out the high because we touched the 886 here, right? So probabilities, are high to take out this high, and that daily naked point of control is still looming there at 98,150, which is definitely an area, I'm interested in. Preferably, I would like it to actually hit after like all the news volatility, so that it's more calm or a more readable chart. But probability is higher locally to take out the high. So we just wait a little bit on what price is showing us here. So Kurtish, what's up? Jeroen, welcome, man. Alimo, welcome. Shocks. Andrea, live in Antibes. Yo, Antibes, mate. I was in Antibes. In the Christmas holiday season. I was there with family of my wife. So her nephew. And the brother of the nephew, they stayed in Antibes for 5 days because they had some business stuff going on there, and we visited them and we walked over the Christmas market and stuff. It was really cool. Antibes is around the corner. It's 25 minutes by train, Andrea. So it would be great to have the opportunity to have a chat. I really enjoy meeting trading people. It's 1 second. The sun apparently decides to go behind the clouds. So, like trading can be quite lonely at times. Of course, we interact in Discord and all that stuff. But it's always nice to meet people in real life. And I had luckily the opportunity to already meet multiple people. I was with the planning. So the planning is first check what happens locally. So the probabilities are higher to take this high because of the 886 touch. Then we zoom out and we will cover the weekly again to begin with. It's been a while since we checked out the weekly, so let's talk about the weekly. And then slowly zoom in daily 4 hour, and then we're back at the 15. So that's going to be the analysis that is coming up. So weekly all the way down to the 15 minutes so that you know what's happening, where we are, what are the probabilities, all the good stuff. And then we have some chatting and Q&A, and if there's time, some alts, but it's always quite tight. If Bitcoin moves and there's stuff going on, then it's not easy to do a lot of alts. Now, generally, alts do take very little time because we do the high time frame, so it's usually a couple of minutes per alt. But let's see where we get. I like this quote. I can see myself there. Yeah. It's Paul Tudor Jones. You can check his quotes. He has many quotes. One of the most famous, Elliott wave, by the way, traders in the world, with his own fund as well. But it's a famous quote that he says his biggest losses came after his biggest wins because he thought he knew what he was doing. And that is, I had a great start of 2025, but I want to tune it down a little bit. I want to take care. What was the book called that you mentioned? Market Wizards is the one I just mentioned. Paul Tudor Jones is in there. Another book I generally recommend for trading psychology is The Mental Game of Trading by Jared Tendler. Doing good, welcome. Yeah, your move and daylight saving here made these live streams hard for me to join. Yeah. It's other side of the world, so it's the way it is. I should really visit Australia sometime. Meet John, meet yourself, travel Australia. But thanks for popping in though, Liquid Mafia, saying hi. John's already in bed. It's like micro WXY. Andrew, what's up? Inflation is running away again, means rate cuts get more likely. So what's the result? Because I it sounds really stupid, but I have no idea about fundamentals, zero. So I don't know. Of course, inflation is running away. I know what inflation is, but rate cuts, I don't know if it's bullish or bearish, basically. I don't know what it means with the charts. Is it good? Oh, it's good for the economy because producer price index is lower, so good for inflation that it gets not too high. Decide. Thanks, John. It isn't lower than expected. Oh, bullish. Okay, thanks. I wasn't there yet. Okay. The market is expecting more rate cuts now, which is bullish for the stock market. Okay, I see. Okay. Werner Vrijens, welcome. Good to have you here. Cosmin got tricked by the first move up yesterday after the news. Doesn't look more like a three-wave than an impulse. I had a diagonal in there. Three-wave structures from the low up to the upside, but that's very low time frame counting. The reason, so it's on my Instagram. I made a video why I went long here. So my long was in this candle here. So I did not engage here because I don't like this volatility stuff. I just waited for the range, but then as price was ranging sideways, I was able to count 1-2s in here. And while I saw the 1-2s, there were also bullish CVDs building too. And that was then a trigger for me to consider going long. And then I started with a base position, so a first entry. And then as price started moving, I had 3 or 4 more entries in this move to the upside. And then I sold before I went to bed. So I must have sold somewhere here for the first time. And then I sold later, I think this morning I sold another bit. So yeah. Mari, welcome. Links, part and icons. I've been watching this channel silently for a while now. Just want to say your knowledge and educational Elliott Wave content is by far the best I've ever found. Thank you, Link Spartan. It's a pleasure, man. It's a pleasure. Thanks for writing that as well. Thanks, first of all, for popping in and watching the content, and then very kind of you, sir, or madam, but to write the comment. I appreciate it. That's what it's for. You know, the channel, when I launched it almost 2 years ago, the goal was to provide updates as well as education, because Elliott Waves is very complex. So I try to simplify things. Now, there's a lot of information which I can't reduce the amount of information you need for Elliott Waves, but hopefully in a way I can communicate things to make it easy. So hello from Korea. Welcome. I can't read the name, but welcome. Good to have you here. You used to have a yellow badge, now green. That means that you now passed the 6 months, or you're in your 6th month as a member. So the badges are basically how long is someone a member for, and green is 6 to 12 months, I believe. So thanks for the support, Ali. Kanashimi, what's up? Bearish for currencies, good for the stock market and crypto. Welcome. Woyo. I'll call you Woyo. Tomorrow CPI is more important. Yeah, it's a very news heavy week. So Sam, I was surprised about your short on Insta showing all the trades in one day. Are you frequently trading so much? Thought you would rather gun for swing trades. It's a mix. It depends on the opportunities. I am a day trader, but I also have swings, you know, like, so I do both. But if there's an opportunity, I'll always take it. So if the chart is clear, then I'm in. So the short, I took the short. It's on my Instagram, guys. But and if you click on the Linktree description, Linktree, social media, it's somewhere there. But the reason I took the short yesterday was because once we took, where was it? Oh, here, this candle here. So once we move below this low, right? The probabilities from an Elliott wave point of view were higher to move down to the blue support box, right? I had a daily here, a blue support box, and a value area low. That is why I sold, because then I had my short, but then I didn't see any reaction. And then the moment price failed and moved below the box, and mind you, we also had some volume increasing, that was the moment I decided to re-enter. And then I was looking for this box, but then my ass was stupid enough to get wicked here. So I got stopped in profit, and then I had to re-enter once this was a confirmed three-wave structure, basically. And then I reached the box, basically. And then I went long over here. So of course, from an Elliott wave point of view, like actually it's almost, so 1 hour time frame is what I really enjoy trading wise, and a 4 hour. And of course, this level here, this low is also a 4 hour low, right? Like with the bearish scenario, you're looking for a flat where this is your target. I'll go into detail in a second. I haven't yet covered the Elliott wave analysis. For the bullish scenario, finish WXY. So yeah, but in my case, what I then like to do is I like to wait for the range. I enter my long, which I did. I then exit my longs, right? And then I just wait for a retracement to form, and then I enter again. And potentially even like to go short for the move down. So in the bullish scenario, you look for a three-wave corrective structure. In the bearish scenario, you just look for another impulse down. And then if we get a corrective structure to the downside here, that is the moment where I get interested for a swing. Because that is the moment where I'm like, okay, if this is a 5-wave structure and we would reject and we get a 3-wave structure down, right, once confirmed, that is the moment where I'm interested to enter. Stop is obviously below the low because, that's your invalidation. And then that is the moment I would run this as a swing trade. So that would be my swing potential, because the moment you take this high again, right, if this is a corrective structure, probabilities are higher to take this high again, meaning probabilities are higher that this move up is a wave 1 or A, right? So you're still looking, you're looking for continuation, and very likely in that case you start moving towards all-time highs. So that would be my swing. So this move up is just a day trade for me. And then if I look for a move down, then initially it's a day trade, potential swing depending on the structure down. If impulsive, I hold it. If corrective, I exit. Which is literally in my plan. So I have two charts, right? I have my analysis chart, which is what I show here, and my trading chart. And on my trading chart in the morning, I always write. I love to write. So I always get my text out. My chart is a different color there. I get my text out, and then I write exactly like what I want to see. Why would I enter? Where's my stop loss? Where's my entry? Why would I exit? I basically make an overview for the day and see if I get it. No, if I get it right. So yeah. What is the support box below the price? This is a point of control of this range here. So I just put it on the chart just in case. Yeah. It's probably still higher to retake mid 80. The probabilities were higher to of course from we hit support first of all. And then with the multi 1-2 bullish CVDs, I was looking for price to move up, and now we're here. As mentioned in the morning update, and we will cover Bitcoin. We do the analysis. We're going to start soon because price has calmed down, which is, of course, what I like to see. I like to see it chill now. By the way, probability is still higher to take the high because we touched the 886 taken from the high to the low. So that's the probability is basically on the 15 for you. Let me remove this little box here, and we can start the analysis. Yep. So we're gonna start on a weekly time frame this time, and then move on to the daily, right? And then 4 hour, and then 15 minutes, so that you have you guys have a full overview of all the Elliott wave scenarios. Let me organize it quickly. So I'll do this. Oh yeah, this morning I forgot to show my my polylines. I forgot. Oops. Anything with CVD going on here? Nah. Oh wait, a bit of bearish CVD with with the high. But this bearish CVD to me is not interesting because we touched the 886. So yeah, that's not important. We have actually a little bit of bullish CVD here on yellow, but whatever. That's very low time frame stuff. So okay. Cheers, Cosmin. Hello, Zandra. Okay, with leading CVD and explain how to identify it. Oh, that would be a question for after the analysis. One thing, Ionut, what I recommend is if you use CVD, the most effective use to use CVD is in a local trend, preferably on the lower time frames, right? 5 min, 15 minute. If you have higher highs, higher lows, and you see bullish CVDs building up, right? That's very good, right? If you're in a downtrend and you get a little bit of a bounce and a retracement and you get bullish CVD here, less interesting because you're in a downtrend, right? Higher risk, higher probability of being leading. That's the short version, I suppose, but hopefully that helps out already. So think about the local trend. So my entry yesterday here, look here, higher low. This actually is a higher low by $1 and another higher low, right? And we also had bullish CVDs, plus I was able to identify a multi 1-2. So of course that was not leading CVD. But focus on the trend first. Is Sandbox, oh, that would be something for maybe after the Bitcoin analysis. News heavy week. Jeremy, what's up, Jeremy, man, from LA. Man, I really enjoyed LA when my wife and I visited. If you ever come to Antalya, well, I don't know where that is actually, Taha. Where is that? Of course, if when I go somewhere, I always write where I go. We got to start. Oh, I actually need some water, but I forgot after the analysis. Target for the retracement, Albert, is a Fibonacci taken from the low at 89 to wherever the high is going to be, and then the 0.5 to 786 most common, 382 less common. Okay. Other charts. Let's first focus on Bitcoin. Let's start. So, okay, I really need. I think I need water. I can feel it in my throat. This is the bullish scenario. Yeah. I'm gonna get water. 1 second. Okay, sorry for that, but holy moly. Necessary. Okay, let's go. It was about time. So, weekly time frame. Of course, we always share the bullish and the bearish scenario on each time frame, and then we discuss the probabilities. You cannot be biased as an Elliott wave analyst to one direction. You always need a bullish and a bearish scenario, and then make, based on your knowledge, of course, you need to know the probabilities of each scenario and how probabilities change. So that is what we're going to cover. Weekly time frame. Let's actually start with the bearish scenario first. So on the weekly, your bearish scenario is this 5-wave impulsive structure, 1, 2, 3, 4, 5. Now, preferably locally, we still take out the all-time high at least once more, potentially twice, but then look for a bigger retracement to the downside, which basically means after these 5 waves, you're looking for a top, and then you go back down basically. Now the target area for your wave 5 here, most commonly 81,329, that is where we are at the moment. If I would do a monthly analysis, then you will see in the monthly that the target area for your wave 5 can be extended all the way up to 170, but that is only if we get there that becomes of importance. At the moment, that's not the case. Now, so far at this moment in time, this is quite simply your highest probability weekly scenario, with the bullish scenario being an alternative scenario, which is what you see here on my chart. So in this case, we have a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now in this particular case, these are your wave 2s. All-time high, all-time high, all-time high, and then a retracement. Now what's the difference? It's the time difference. These wave 4s are significantly bigger in this scenario. Like these ranges should be very big because they are compared to the wave 2s. Right, and wave 4s are commonly longer than 2s. Now, gotta say, these 2s are quite lengthy, so wave 4s might be a bit shorter. But anyway, they do take a good chunk of time. And if we already are on the 14th of January, and we know that one of these ranges, this one was what 7 months or something, right? Like, we don't have that time for this scenario as well. Like, the probabilities are highest to end the cycle, or at least the bull market, not the cycle. The bull market in 2025, preferably March to October. And March to October, well, in this case, you might end up in 2026. It takes a very long time. And the difference here is that locally, you look for one more top and then a retracement, right? Or high, range, high. And this range is matching one of the 2s down here. So it's a shorter range in time. As you can see, they can still take a month, right? 1.5 months, 2 months, no problemo. But from a time perspective, this one is definitely, of course, quite interesting. So the bullish scenario is quite simply not yet your highest probability. Now, what needs to change? First of all, it would be nice to see price move up and volume increasing, which is not the case. The highest volume is here in this candle. It is most common for a wave 3 to have the highest amount of volume. And this is your wave 3 in blue of your green wave 3. So preferably that's your highest volume move to the upside, which is not the case. It's on lower volume, which is what you like to see for a wave 5. You want to see another high, right? Wave 3, wave 5, another high on lower volume. So in other words, in both of the cases, we preferably still look for all-time highs. But what happens after is very important. If we continue pushing and volume increases, that's interesting for the bullish scenario, right? And also if you blast through 130 without any problems, right? That's interesting for the bullish scenario. But up to that moment, the bearish scenario, this one here, has higher probabilities. On the daily time frame, if we then zoom in to the daily here, oh, actually, we touched the 382 now, so I can reduce the size of my box up. So this is the higher probability scenario on the daily. As long as you do not reach invalidation, or at least have a very high volume move to the downside, this is your higher probability. 1, 2, 1, 2, 3, 4, 5, at least one more 5 to the upside, with the potential of adding another 1, 2, 3, 4, 5. But that is stuff we'll only cover later. It's not yet important at all. We're not even at all-time highs. We're not in price discovery. So only when price starts ranging again, that is when it's going to be important to see. Is there's going to be another 4, meaning a correction? If so, we look for upside. If this is an impulsive structure to the downside, we look for a bigger retracement, right? But this is your higher probability scenario. Target area for 4 is visible on the chart, 89.4, 83.6, invalidation 77.7. Bearish scenario, lower probabilities, 1, 2, 1, 2, 3, 4, 5, 4, 5, finished, bigger retracement. Reason probabilities are lower is because of your wave 4 here in blue being very short compared to 2. Most common is wave 4s being longer in time compared to your wave 2s, which tend to be shorter in time. It's not a requirement, it's not a rule, it's a guideline. But this wave 4 is incredibly short in time compared to your wave 2, which affects the probabilities from an Elliott wave point of view. If we then jump to the 4-hour time frame, then on the 4-hour time frame, I will summarize the probabilities with the polylines after the total analysis. Right? We're almost finished. On the 4-hour time frame, your bullish scenario is a finished WXY. It's a double zigzag, ABC and a W, 3-wave structure in a wave X, WXY in this case, and then an ABC to the downside. Right? In this particular scenario, there is, well, this morning there were 3 things that are important, but let's talk about one now, and that is the retracement. So in this particular scenario, you have a 535 finished ABC, and the bullish scenario, of course, is this is your invalidation. You don't want price to take out this low. And what is most important as a difference between the bullish and bearish scenario is the retracement. So in the bullish scenario, we want to have a move up, being an impulse. We can count an impulse here, 1, 2, 3, 4, 5. We want it to end, right? It would be nice, I mean, that would be my favorite, to hit the daily naked point of control and then start the retracement. So that would be something that I will look for, absolutely. But the retracement to the downside in the bullish scenario has to be a 3-wave corrective structure, which is then labeled 2. So in 2, you can have a zigzag 535, and then you move back up. You can have a flat A, B, C, right? Sideways W, X, Y, fine. The only thing you cannot have is a triangle, because the moment you get a triangle, that's actually bearish, because then you label this as an ABC and you expect a bigger retracement again. It's not what we like to see. So the retracement, which we don't yet have, because at the moment market structure up here is still bullish, right? But nothing keeps pushing, right? Once the retracement comes, the structure of that retracement will be very important, which of course we will analyze on a daily basis here on the channel. So a little bit of patience required. And then the bearish scenario is that you go back down again. Now there is a more bearish scenario, by the way, which I'll show in a second, but basically it follows the same line, but instead of bouncing, you continue. So here you have a bigger WXY double zigzag, and it's an A, B, C, and W correction in X, and a bigger A, B, C, and Y. What's the difference, right? Because that's important. It's like, oh, what the fuck? It can go up, can go down, can go sideways. What's this guy talking about? It's about knowing what you need to look for, right? It's probabilities. So the difference with the bullish scenario here, right, is that in this scenario, you look for a flat ABC. So this is a C, not a wave 1. This is labeled C, A, B, C. And then after B is finished, you look for an impulsive move to the downside. You want to see a strong 5-wave move, preferably accompanied by bearish CVD divergences. So the moment you hit resistance, you have an impulse down, bit of a range, impulse down, bit of a range, maybe another one, and then you drop. And it would be great to see some bearish CVDs as price moves towards the downside to support such a move to the downside as well. Right? So that is the biggest difference. So that is why the retracement, which sooner or later we'll get, is so important, because the bulls need a 3-wave structure, the bears need an impulsive structure. That's the biggest difference. Now then, as a, I suppose, special, to add a special thing to the stream here, let me find what John had on his chart. Where is it? One second, I'm looking in Discord now, because John, great Elliott wave counter, he of course also has the most bearish. Oh, there we go. If you are a perma bear, then this would be for you. So you can also label this as a wave 1, 2, 1, 2, and then bear market. But that's, again, it's not the highest probabilities, but you got to be aware of everything. Now, to put this on my chart, that's John's chart, you basically have wave 1, 2, 1, 2, maybe you get another 1, 2, but then you drop. And this drop is then significant. That's a really big one. It's just not the highest probabilities yet. Like we take it step by step. It of course, like, and also with John, he's not bearish, but he has the chart or the count on his chart. You got to be prepared. Got to have alternatives and preferred counts, and he keeps an eye on it, and so do I, and so should you. Now the local price action will let us know more, because if we do go back down here, right, and we get an impulsive structure here to the downside, of course you have the risk of continuation. So that is why this retracement is going to be so important. It's all probabilities. So let's just wait for a range to form, which is always what I like to say, because it's very important in trading. What Blaser says is absolutely correct. So flats, if you can here, a flat ABC, another ABC. If you have a multi 1, 2, 1, 2, 1, 2 down, it is common in a multi 1, 2 for both of the wave 2s to be the same corrective structure. In this case, they both would be labeled as a flat. Another thing I didn't say, but I do like to share, that's the thing. You don't want to like spread fear or something. It's all probabilities. Let's just first wait for the retracement. No. However, in the bullish scenario here, I don't often talk about this, but your wave 4 of a higher degree, so the blue count is your higher degree, 1, 2, 3, 4, 5, right? Your lower degree wave 4 is the wide 4, so that's the price action here. Now it is common for a wave 4 of a higher degree to retrace to the price action of wave 4 of a lower degree. It is, however, not very common for wave 4 of a higher degree to move below the price action of wave 4 of a lower degree. It's not an invalidation, by the way. It's just not something you see way too often. Now, if it's a wick, that's fine, right? This wick, accepted. But preferably for the bulls, this would be your low. And you just put your 4 here, and you just impulse continuation to the upside and not come back down again, right? Because then you're really going to lose your lower degree wave 4. Again, it's not an invalidation of a wave 4, because the invalidation is 77.7, right? But yeah, details. So just sharing information. And on a 50-minute time frame, probabilities are higher to take the high because we touched the 886. So that one is, of course, quite easy. You take a fib from the high to the low, drag it to the right, toggle on the 886, touched. Probabilities are higher to take out the high just because of that. And therefore, the daily naked point of control above us is very interesting. So to summarize probabilities, on the weekly, where are my polylines? There we go. In both cases, we are looking preferably in that case for another high. But as you can see, we start to also reach an area where a big portion of the move has finished. I mean, look at this, right? Don't forget, we started at 15K. It might be easy to forget when you reach 100, like people shout about 200 and 300 and 500 and 1 million. But look at what you've already done in this bull market. It's very impressive, the amount of X you could have had, of course. Now we're looking at basically finishing the structure. You either look for a 5 and a retracement down, right, with, of course, the alternative potential of it already being finished, or you're looking at a couple of 4 5s. Now, 4 5s are still quote-unquote bullish, but it's not a wave 3 anymore, right? It's like the biggest part of your big move in this case would then already be finished. But on the weekly, yeah, it would be nice to preferably still see another high. On the daily, however, zooming in, at the moment, probabilities remain higher to follow the blue line. pop, pop. Now that means that locally, the retracement we get after this move up needs to be corrective, not impulsive. So that is your decider base. It's almost the decider between blue or red. But your move up here, the retracement needs to be a 3-wave structure on the 4-hour time frame. But at the moment, at this time of speaking, blue has a higher probability compared to red. And then on the 4-hour time frame, I just want that daily naked point of control to be touched, man. And then the retracement is going to be important. Of course, your most bearish scenario is continuation down. But we'll get to that scenario if you actually take the low. Because if you do take this low, then the bullish scenario becomes green, bearish scenario continuation. It's just not yet relevant. So yeah, looking for price to move to the daily naked point of control. Look for a rejection. And then based on the move to the downside, probabilities are going to be very clear. If corrective, follow white. If impulsive, follow green down. Bullish is then up, bearish continuation. So yeah, take it step by step, no? So in other words, weekly, still another high, daily, preferably also still another high. 4-hour time frame, look for daily naked point of control, and the rejection, unlikely to move up in a straight line and take the high at this moment. So looking for a range to form and a retracement. On the 15, probability is higher to still take the high, so the daily naked point of control is interesting. And then based on the retracement, we'll know more. So yeah. Yeah. And yeah, what to say? Your bullish scenario is taking the high, bearish scenario is a 1-2-1-2. Oh yeah, some additional info, I suppose, for the Elliott waivers. In a WXY here, the minimum target for your wave Y is to take out the low of your W, of course, in a double zigzag. We also move below the 0.618, which is regarded as a minimum target. But the double zigzag, of course, common target is actually lower. We didn't hit it. In wave Y, if this is an ABC, your wave C is very short, both in price and in time. It's not an invalidation, but it's noteworthy. Take a fib from the start to the end of A to the end of your B, because we know, of course, right, that this has to be your high and this is your impulse down in C. But what you can see is that the move down, so C compared to A in time, C is shorter than the 0.382, which is incredibly short for a wave C. Time is not an invalidation though, but it is short. Looking at time, trend-based fib, or a price, trend-based fib from the start to the end of A to the end of B, you actually just missed out. Oh no, you didn't. Wait, we hit it. I don't know why I wanted to say we just missed out. I am misinformed. We actually hit the minimum target for wave C, which is the 0.618. Most common target for C is the 1 to the 1.236. Minimum target is the 618, which is touched. It's not very common for wave C, but it definitely, in this scenario, has to be your support, has to be your low. Oh wait, that's the reason why. Wait, I was on log. Was I misinformed or was I not misinformed? Because I was on log. Ah, there we go. We did not touch the 618. You don't want to use log here. The percentage differences are not big enough. So we didn't touch the 618, which is then the minimum target for C. And wave C is also incredibly short in time. Now, again, not invalidation. Structure is always leading, right? All the other tools we use are just in addition to the waves themselves. But it is interesting, to say the least, that your wave C is very short in time, very short in price. Well, we did hit, of course, great support. So, I mean, good stuff. But, yeah, noteworthy. Like from a time perspective, and if you want to look at size, so time and price, then, of course, a bearish scenario would be nicer because you have a bigger structure. The problem is that getting down here, the question is, do you have the strength to go back up, or do you just continue and top is in? But yeah, weekly time frame, another high. Daily time frame, another high. 4-hour time frame, start to look for a retracement, hopefully after the daily naked point of control. And then on the 50-minute time frame, look for another high. That's your probabilities. Can you try to count a 3 min? I'm not really interested in this, you know, this stuff. Like it's this is of course the news candle. What do we have anything going on? We do have some bullish CVDs here, as you can see. But nah, you know, like I don't generally enjoy being too involved with news price action. So yeah. But yeah, that is the analysis for you on all of the time frames. Cbel had an absolute banger trade yesterday. Congrats, Cbel. Manage it well. Yeah, manage it well. I don't want to see that green line come back down and you telling me you didn't take profit. Okay, so the Elliott wave analysis, I actually don't know when we started. When did we start? I think like 30 minutes ago or something, 57, 27-ish. Also, I mean, I don't know. Okay. Turkey. Or Turkey, right? It's now officially, right? It's Turkey. It's not Turkey anymore. Turkey. I believe, like a friend of mine in Turkey said that. So I'm a board member of the Global Esports Federation, and we have someone from Turkey in there as well in the board. And we had the World Championships in Istanbul in 2022, I believe. We organized it. And that was the first time when I was there. I heard it's Turkey. Christian, what's up? Captain Swag. It is lovely. It is. Reza, welcome. Antalya is great. I have no idea. I'm clueless. Gotta check it out. Double clicking the price on the right, autofocus. Christopher, double clicking the price on the right. Oh, yeah. Yeah, there's also when you have the brush and you mouse click right, then you go back to your cursor. You know, small little tricks. Watch and listen, welcome. Thank you all for all the good educations. It is a pleasure. Thanks for writing that as well, watch and listen. Thank you. I'm happy you enjoy it. James, one lucky dog. What's up? Welcome. I did brought donuts for everyone. Please help yourself. Opens laptop and notebook. I wouldn't mind the donut, but well, working on the protein, man, not the sugar. The fact that above, yes, that's true. Tox, hello. It's worth too short now. You always need your own plan and your own strategy. All I can say is I am not in a short according to my own plan and strategy. But everyone will have a different plan and different way of trading. For example, if you shorted the 886 here, you had yourself a great little trade. You know, for scalpers, this is perfect. For a swing trader, maybe depends on where your stop loss is. So, but depends on your own plan. With that in mind, by the way, you want to check out this. So, to answer that question, the best thing that I can actually do to help you is to go here. Check out this video. Check out this one. Because this video will help you step by step to create a trading plan, or at least know what to do right? 6 steps. I always talk about these six steps in live stream. So now I don't have to because I made a video about it. So you can just check it out. It's 8 minutes of your life, but hopefully it will give you a lot of profitability. It shows you the steps that you need to take in order to know what to do, right? To have a plan and to trade profitably. Exactly. So yeah, check it out. Check it out. Do you think the RSI is oversold before a renewal of highs? Wallace and Lego, welcome. I'm not really a RSI user. I know the RSI divergence between a wave 3 and a wave 5, but I really don't enjoy using the RSI. I never use it. It's for me, the CVD, which is on AGGR template, is in Discord. This is by far my favorite indicator. It's also my homepage video. And it's my most viewed video in general on the channel, almost 50K now. RSI, yeah. We go up and you see you have divergences, right? So as price is moving up. Now the first little bearish RSI divergence was here at about 90K. That's the thing with RSI. Like you have your first small divergence here, and then it just goes up and up and up and up, and you get another divergence, which was with this high, and you go up and up and up and up. So of course the thing it tells you is, okay, there might be potentially a drop coming relatively soon. But if you would have either like sold or tried to short this first bearish daily like RSI here for a bit, that's a problem. You only came back now. You know, so you basically moved all, you missed all of the move up and all of the move down. Another great story I have about RSI is here. I always love telling this. Now RSI can be a great tool, but you need a very clear strategy and plan on how to use it. So your first bearish RSI was here at about 35, right? You can see price moving up, RSI moving down. You never came back here, right? You never came back to your first bearish RSI on the daily. Ever so far. Isn't that interesting? And then you just go up and up and up and more bearish, right? But up, 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 up. And then it resets, but it actually resets here a lot higher than your first divergence was. Even here, right? You never came back. I don't know. Like, for me, CVD is a lot more superior because it shows me what's happening in the market now. It's not a momentum indicator, right? It shows what happens in the market right now. So it's immediate information, right? I can see what's going on. Is there absorption? Are there buyers? Are there sellers? Like, you know, prices moving up, bullish CVD. There is absorption of limit of market shorts with limit longs, right? Besides the fact we have the 886. But of course, right, bullish momentum. This is 1 minute, by the way. I prefer using the 15, but this bearish CVD is not interesting because we touched the 886. But CVD is my favorite tool. RSI can be very good, as well as money flow indicator, MACD. Any indicator can work in your trading strategy as long as you have a very clear plan and you know exactly how to use it based on data. So you want to collect data and then figure out like when is RSI best used, right? Because you don't want to sell the first divergence you see and then miss out on like 50K. What's the difference between a multi 1-2 and a second 1-2 just being the 1-2 of wave 3? That is a multi 1-2 overset, Tim. So you have 1-2 of your higher degree and then another 1-2 of your lower degree, which is indeed your 1-2 of 3. It's the same. For B flat continuation up, I'll reconsider. Yeah, I think this morning, right? I don't know. I was saying as well. This move down. I'm not completely sold yet. If this was an impulse, right? 1, 2. You want to see 3, 4, 5. It's just that the start here has a lot of overlap. which doesn't sit well. This is where the acceleration happened, but that of course can still be it's separate structures. So for me, the retracement that eventually comes is going to be a lot more interesting. Yeah, I hope for the white scenario. Rowan, welcome. Cheers, John. I'm still in the long. I have a close order just below 98. Good job, Sibel. What a trade. I just find it interesting to hear your thoughts because it's fast price action. I'm not so patient. Yeah, in that case, I mean, look, the thing is that you hit the 886. So everything after for me is pretty irrelevant because you're looking for price to take out this high anyway. Probability suggests you take out this high because you touch the 886. So I don't like, this is just opportunity. For price to eventually take the high, so potentially interesting for longs. But I'm not really. I don't really enjoy going to too low time frames. Also, it's like 1 minute. It causes a lot more stress than hanging around on a 1 hour. Sham Garam Yun, always having my notebook in front during the streams and writing down all the wisdom. Absolute pleasure going through these charts together. Thank you a lot for sharing, and greetings from Seoul. Yo, I've been there once for an esports world championship as well, which was my previous career. But thank you, Sham Garam Yun, and very nice to hear you're having a notebook and you're writing things down. You're studying at the same time. It makes me happy, because Elliott Waves is tricky, right? And if you have I always recommend a notebook and a pen when you study Elliott Waves. And it's nice to hear that you actually use a notebook and a pen, and then while watching you write things down. That's really cool. Thanks, Shamgram Yun. And Seoul was a nice place. It was also the place where I went to. It was the first time I saw this. Like my mentor, not trading mentor, but more business board member type of mentor, walking through the streets, and it was a market. And then they have these stands, and then they have the fish are swimming in a tank, and you can literally just say, "I want that one," and then they grab it, and then they grab it, they go behind a little like not even a window, like just a small little wall thing, cut, poof, and like a few seconds later, you literally have the fish in your hand. Sometimes it's still. Still moving. I've never seen that before. I'll never forget. It's not really something that you see here. So that was interesting. Is the wave 5 finish on the 50-minute chart? No, probabilities are higher to still move up. I'm Korean. Welcome from Korea, probably that is. Yo, my bud, how are you? How's your opinion about France? So far, so good. Yeah, I mean, we're loving it. The weather is great. Winter is awesome here. Sun is shining, sky is blue. We can walk outside in hoodies. I'm actually wearing my Kunz hoodie. But no, it's been a great experience. The ocean nearby. We have, of course, the mountains around the corner for hikes. We did the Tête de Chien recently, which is a hike between Cap d'Aille and Monaco, which I can recommend. And we also have a ski resort on 2 hours driving, Isola 2000. We've been there as well. It's awesome. There's so much going on here, right? There's so much to explore, so much to hike. Like, man, if you are here your whole lifetime, there's not even enough time to hike all the stuff you can do here, like all the hikes. It's insane. It's beautiful. And so it's nicer from a work-life balance because we tend to be outside more, as in the Netherlands it's more rainy, more cold. Also, public transport here works great. Cars, no problemo. The roads are good. There's a lot of activities in the cities. Every city has their own distinctive features. Yeah, we like it. Yeah, won't go back, not anytime soon. How did you get the daily naked point of control? I got it because of Atas. And then the templates, Atas templates, are in my Discord in the Good to Know channel. Atas. Same question basically. So it is not. It's not TradingView. It's from Atas. Atas is free for crypto. You can just download it. Oh, another one. The use. Also from Turkey. No, Turkey infiltrating the stream. Why is the CVD that you use so much different from the CVD on Coinalyze? It depends on what the CVD is based on. So you can code CVDs, right? So if you look at your CVD, so first of all, the CVDs can be the same, but TradingView CVD is calculated in a different way, which I cannot recommend, but Coinalyze is pretty good. But if you go probably, I'm not sure if you can see this in Coinalyze, but if you go to the code, you can edit all the different exchanges that you want to include, the yes or the no, in the script. AGGR is just a lot more customizable, and for me, it's the best platform because of that as well. 8 minutes of my life. Could you remake it for 6? Short are not always better with those type of videos. You know, I gotta deliver the goods. Overbought RSI, oversold works way better. Rarely marks the low perfectly. Yeah, it's all about momentum, of course, having an expectation. 1-2 on the 5 minute, possibly. We'll see if we get any sort of reaction at resistance. Would you count this news pump as a wave 1? This is so low time frame. Huh? I mean, look, this stuff, you're either gonna. So I'm already on the 1 minute time frame. You cannot see any structure here. Is this a 5 wave? Is this a 3 wave? Now, because of the impulsivity, you would think it's a 5 wave. So then you're either labeling this as a wave C, a wave A, or a wave 1. In a wave C, it has to be a flat. So you need an A, B, and this is your C, which then automatically leads you to a W, X, and then you need a Y, either a triangle or your wave Y has to be a flat. Count this as a wave A, and you look for a wave A, B, C. Take out the lows, preferably, and then come back up to hit the daily naked point of control. Count this as a wave 1, and then, yes, you look for 2, and eventually 3, and then 4, 5 later. What to pick, it depends on the move afterwards. It's difficult to... First of all, it's 1 minute stuff, which to me is not really too relevant. We do have bullish CVDs as price is moving up, but what's most interesting to me is we touched the 886, so I'm looking up. And that's kind of like the only thing that I need to know, unrelated to the exact price action. I'm just waiting for price to take the high. And once it does, we'll see if we get a flat, you wig the high, and then you move down, take out the low, and then you go back up to hit the daily naked point of control. Maybe price continues. But that's just trade management. Knowing the probabilities to take a high or a low, that's where the opportunity is, like where a trade can be done to trade in the direction of the probabilities. But what happens after is just trade management. Can take a TP1, put stop break even. If we continue, cool. If we fall back down, cool, right? So so for example, yesterday, before going to bed, I closed 50% of my long here. Now, some people may say, of course, that's really stupid. First of all, of course, they don't know how much I made. But second, some might be like, oh, why would you close 50% here? The price went so much up, and the probabilities were higher for price to move to the upside and be an impulse. And that's correct. It was higher to move towards the upside. However, I do like peace of mind, and controlling my psychology is very important. And me getting rid of 50%, taking that profit into my pocket, putting my stop at break even, which it already was anyway, but just taking a bit off helps me. It just, the moment I go to bed, I'm like, whatever, I already took profit. If it now returns, I don't care, right? there's always that like slim chance, oh, this is an ABC, as long as you didn't touch the 886, but we did during the night. But that's trade management. It's my initial position was long, which was very nice, in the direction of the trend, and then everything after is management. So here, probability is higher to take the high. What happens after? Purely management. So I wouldn't, like, we only know in hindsight, as always, if this is a 1A or C, but in general, you look for price to take the high, and that's most important. That's the bias, basically. It also ends on 3 waves. That would be very interesting. Overlap here as well. Yeah, we didn't have a wave 4 here or something, right? And there's a lot of overlap here. You could get some sort of a diagonal in here, of course, then have a flat ABC. And then here you need, this is either ABC, 5, 3, 5. Yeah, there's definitely the potential for a flat. That's, of course, why we are observing price action. Now, with regards to Fibonacci levels, oh, by the way, I have to go. I just see the time. We also have the golden pocket just above the daily naked point of control. So, of course, it's interesting to hit the golden pocket as well. And then the 786, we have an order block here around 100, which is also important resistance. If you pass this, then yeah, I mean the highs are basically going to be your next target, pretty much. So yeah, but I gotta start moving, everyone. Time is ticking. I had an hour in my agenda, and I gotta stick to my agenda, else my day is becoming a problem. How to get CVD line in Tradingview? There are CVD indicators. They're just not good enough for me, in my opinion. So yeah. How to collect data? An Excel sheet. Just use an Excel sheet or use a software to backtest. So you go backtesting and then forward testing. But check the video first, because I explain a couple of things in the video that will help you out. So go to my main channel, educational playlist, all the way down, and then the video on how to build a plan. Funded account and the good ones, I just probably stick with the famous ones, which is like FTMO, and not the newer type of, like, fishy ones. It might be cheaper, less fees, whatever, but probably like FTMO. Yeah. So wave C can never be a WXY. Wave C always needs to be a 5-wave structure. Use the length of wave 1. Wave 1 is an option. So you compare 1 against 5. Guilon, welcome. Birabit, what's up? What's up? I'm just skimming here. Posted the move down in gold. Cheers, Tim. I'll check it out. Looks like an impulse. We're going to 1 min. Be patient, my friend. Wait. It will show. Of course, again, 886 was hit, so probabilities are high to take the high. Usually the invalidation for a flat, the 1.618 Fibonacci, taken from A to start of A to the end of A. End of A to the end of B. That's your wave B invalidation. Your wave C invalidation, wave C's can be long. You just need to wait for an impulse to end. Of course, if you're going to move way beyond the 2.618, that's when a wave C becomes tricky. A wave C of a flat can easily go to the 1.618 extension, but once you move to the 2.618, probabilities decrease. How to manage open positions? Yeah, could be an interesting video. How do you plan your RR if you always close part of the position and leave part and break even? I trade, every trade for me is different. So for me, first of all, my win rate is most important. Again, psychology. So I don't mind giving up a bit of RR to have a better psychology. Second, for example, locally, when I entered my long yesterday here, oops. So when I entered my long here, I started with a base. I call it the base position, but it's basically my first entry. And then as price, so my RR was good, but then as price moved to the upside here, I added, while my risk remained the same. So I was upping my stop loss with my new, like my entry position went higher, of course, because I'm adding. My stop loss went up as well. My risk remained the same. So I started with an initial position, right? My eventual profit in R, wait 1 second. If I would compare the profit that I made in RR with my first risk, so I had a risk here. 1 second here, then where is it? I closed, today is the 14th, 13th. The low I entered at around 92. How much did I make? Oh, here. Wait. I eventually made 10R on that long. So my first entry was of course less R, but then I added based on strength. My risk remained the same. My risk remained 1R, right? So my dollar value risk did not change. As price was moving up, my risk remained exactly the same while I was buying. And it just increased the profit. And I made a 10R yesterday. So or actually also this morning, I decided to close it. So yesterday before bed, I closed 50%, which was at a price of, that's the fill price. Let's see. Yeah, so 94,874. 94,874. So that must have been here-ish. 94,874.2. Correct. And then I closed more. Let's see. And that's today. Oh yeah. Oh no, wait, here. Yesterday, yeah, I'm so confused. All the trades. 94,238. So I closed 50% at 94,238.1, and then I closed more at 94,874 this morning, just because I wanted. Then I re-entered a long this morning because I saw strength here as price was moving up. So I entered a long again. No, it's not that one. Open, oh here. Open long at 95,943. 95,943, which was here in the push, right? So we ranged. I identified strength. So I added, or I open a new position. And then as price move up, once we started to retrace and got close to the 618, that's when I exited. So yeah. So I got 10R on my risk yesterday. Now, of course, your risk, like depending on the trade, your risk can be higher or lower in percentage portfolio terms. But from a R trading perspective, the risk I took versus my reward at the end was 10. So because of the management, I just added as price was going up. Kansas in 1871. That should help me learn Elliott wave theory, right? It should. It should help you out. It should make you more confident. The origin of Elliott waves is around the corner. Cheers, VZH. Okay, everyone, it's time for me to call it a live stream. I got to go now. I will put the timestamp of when the analysis started in the stream, and I will also identify if it was the weekly, daily, 4 hour, and the 50-minute time frame analysis, so that you know, right, where you want to. Depends on what you want to see, but at least you can see the timestamps. Yeah, we checked the bit of news that we had and observed the reaction. We're still ranging. Probabilities, of course, higher locally to take out that high. Daily naked point of control is looming ever so close. So yeah, thanks for being here. And tomorrow morning will be a new video update, and in the afternoon, of course, a new live stream. My wife and I are going to be out and about at the end of the morning, so the plan is to come back in time. But let's see how it goes. The plan, of course, is to be back at 2:30 because of the news. So, yeah, let's see. But, cool. Thanks, everyone, for being here. Thanks for hanging out. Trade safe, right? It's a volatile, expected volatile week with all of the news that we have going on. So manage your positions well. And if the volatility is too much, right, there's no problem in just sitting out for a couple of days. Wait for price to stabilize, give you more information, then just start again afterwards, right? So there's no need to always be part of the chart. You know, there's always a new opportunity, and as a trader, in my opinion, it doesn't matter if price is at 100K or 10K, you trade the movement, right? So you never miss out. There's always a new opportunity, right? So take care with your hard-earned money, and hold on to your profits. Don't waste them once price starts moving and wicking and doing crazy stuff. You know? So take a step back from the chart, chill, and look for new opportunities. Have a great dollar day. This morning was good already. So yeah, we good. Thanks everyone. I'll catch you tomorrow again.